Imagine I could guarantee you a 40% return on your portfolio by the end of this year. The only condition is that you are restricted to making exactly one single trade per month. Most amateur traders find this deal strangely difficult to accept. Even with a guaranteed profit on the table, the prospect of sitting perfectly still for weeks at a time feels like an intolerable restriction. If the idea of limited activity feels worse than the prospect of losing money, you are likely using the market for something other than wealth. You are paying a fee for the privilege of staying active. This indicates the presence of a hidden psychological loop, a trading addiction that makes your knowledge of charts and indicators secondary to your need for movement. Years of practice will only result in a steady loss of capital if your brain is secretly prioritizing the thrill of the trade over the growth of your account. Your brain's chemistry explains this compulsion. It is a common mistake to think the chemical reward happens when you close a trade for a profit. The most intense spike of dopamine occurs just before you enter the position. The chemical hit comes from the anticipation of what might happen next. Because the brain craves that specific rush, traders often jump into positions before a setup even forms. You aren't following a strategy, you are satisfying a chemical demand for an immediate event. This hunger creates a compulsive need to check charts during breakfast, in the middle of work meetings, or late at night when there is no significant volume. Staring at 5-minute candles provides the same drip feed of adrenaline as scrolling through a social media feed. It doesn't improve your analysis, it just keeps your brain occupied. When you treat the market as a source of constant stimulation, you train yourself to make irrational, impulsive decisions just to avoid being bored. This is most obvious during a sideways market. When the price moves flat and volume dries up, a professional sees a signal to walk away and wait. For a trader seeking a chemical hit, this silence is unbearable. The lack of movement feels like a missed opportunity. This restlessness leads to inventing reasons to trade. You begin seeing patterns in random noise and drawing complex trend lines over a flat graph just to justify clicking a button. This is the action trap, the false assumption that more activity leads to better results. This behavior mirrors a casino's business model. A casino doesn't need to win every hand. It only needs to keep the player making as many consecutive bets as possible to let the house edge do its work. The data is clear. The individuals who trade the most frequently are almost always the ones who earn the least. In the market, every unnecessary action carries a mathematical penalty. If your trading routine feels exciting, you are likely exposing your capital to a high risk of total loss. While movies portray trading as a high-speed, chaotic environment, the reality of a professional career is intentionally slow and repetitive. The ability to sit in front of a screen and do absolutely nothing while waiting for a precise moment is the single most valuable skill a trader can develop. Wealth moves systematically from the impatient participant who needs constant action to the patient professional who can wait for hours or days. During your next session, pay attention to your heart rate. If it spikes right before you click buy, recognize that feeling as a craving for excitement, not a reliable insight into the market. Consistent profitability requires you to view the market as a place of work rather than an amusement park. When your trading becomes boring, you have likely found a sustainable strategy.